Digital Banking Revolution Trends in 2025. In 2025, the digital banking revolution is no longer a distant promise but a tangible reality reshaping every facet of financial services worldwide. Advances in technology, shifting consumer expectations, and evolving regulatory landscapes converge to create an ecosystem where traditional banking models are continuously reinvented. Across the globe, financial institutions are harnessing technologies such as artificial intelligence, blockchain, advanced data analytics, and mobile innovations to offer a level of personalization, efficiency, and security that was unimaginable a few years ago. This transformation is powered by a fundamental rethinking of banking services, where convenience, speed, and seamless integration redefine the relationship between banks and their customers. At the core of this revolution is the shift from branch-centric operations to an omni-channel approach that offers banking at the fingertips of every user. By 2025, most consumers expect to access a full suite of banking services via mobile applications and web platforms, enabling them to manage their finances in real time regardless of location. Financial institutions are investing heavily in redesigning their digital interfaces to create intuitive, user-friendly experiences that mitigate the friction of traditional banking. This evolution is not merely about transposing existing services to digital platforms. It involves leveraging real-time data streams and behavioral analytics to create personalized dashboards that offer recommendations tailored to individual financial habits. For instance, an app may automatically alert a customer about unusual spending patterns or suggest optimized saving strategies based on the analysis of their past transactions. This hyper-personalization, facilitated by advanced machine learning algorithms, not only enhances customer satisfaction but also strengthens the overall relationship banks have with their clients. The integration of artificial intelligence and machine learning remains central to the digital banking landscape in 2025. These technologies enable banks to automate routine processes such as loan approvals, customer support, and regulatory compliance checks. For example, virtual assistants that are powered by natural language processing offer round-the-clock customer service, answering queries, and guiding users through complex transactions without human intervention. This not only reduces operational costs but also minimizes the possibility of human error, thereby increasing the overall reliability of digital banking platforms. In addition to customer-facing applications, AI-driven risk management systems analyze vast amounts of transaction data in real time to detect potential fraud or security breaches. By continuously learning from every interaction, these systems are capable of adapting to emerging threats faster than conventional models, ensuring that security protocols are always one step ahead of cybercriminals. Blockchain technology has firmly established itself as a cornerstone for creating trust and transparency in digital banking operations. Its decentralized ledger system is highly effective in verifying and recording transactions with minimal room for error or tampering. In 2025, banks are increasingly leveraging blockchain not only for cryptocurrencies but also for streamlining cross-border payments, managing trade finance, and even simplifying the process of verifying customer identities. The immutability of blockchain records helps reduce the risk of fraud and ensures that every transaction can be audited in real time. This level of transparency removes many of the inefficiencies associated with traditional reconciliation processes and builds a foundation for more secure and accountable financial ecosystems. Smart contracts, a natural extension of blockchain technology, automate complex financial agreements by ensuring that terms are executed automatically when preset conditions are met. This innovation is promising to redefine how financial agreements are structured, cutting out middlemen and reducing settlement times almost to zero. Open banking continues to be a driving factor toward a more interconnected and competitive financial ecosystem. By enabling secure sharing of customer data between institutions through standardized APIs, open banking has dismantled many of the traditional silos that once characterized the financial services market. In a trust-based digital environment, customers benefit from competitive offers that are customized to their financial behaviors and goals. Startups, as well as established players in the fintech space, are leveraging open data to create innovative products that help users manage their budgets, find optimal investment opportunities, and even compare loan offers side by side. This transparency not only fosters a level playing field but also forces incumbent banks to continually enhance their offerings to stay relevant. Consumers, armed with more data and choices than ever before, are the true winners in this newfound competitive landscape, enjoying better rates, lower fees, and a more comprehensive view of their financial health. In the realm of payments, the convergence of digital wallets, contactless transactions, and mobile point-of-sale systems is revolutionizing how consumers transfer money and settle bills. The technology underpinning these systems is becoming increasingly sophisticated, ensuring that transactions are both swift and secure. With the global adoption of digital payment solutions, the reliance on physical cash is rapidly diminishing, giving way to an ecosystem where every transaction is recorded digitally. This digital ledger not only helps in tracking consumer spending patterns more accurately, but also enables banks to tap into new revenue models based on transaction data analytics. For merchants, the benefits are twofold: faster payment settlements combined with reduced processing fees, while consumers enjoy the convenience of speed and security provided by cutting-edge encryption and biometric authentication methods. Data privacy and cybersecurity are paramount concerns in this digital shift, and banks in 2025 have responded by reinforcing their data protection frameworks with advanced techniques. Robust encryption protocols, secure authentication measures, including multi-factor and biometrics, and continuous monitoring against cyber threats have become standard features across digital banking platforms. The increasing sophistication of cyber attacks has compelled financial institutions to not only invest in high-tech security solutions, but also to foster a culture of continuous improvement in cybersecurity standards. As regulators demand ever higher levels of compliance from banks, the convergence of regulatory technology, RegTech, and digital banking is helping institutions automate the monitoring of compliance issues, reducing the likelihood of costly fines and bolstering consumer confidence. This unwavering commitment to security is foundational to the trust that customers place in their digital banks, ensuring that this revolution is sustainable over the long term. A significant trend in digital banking by 2025 is the blurring of boundaries between traditional banks and fintech innovators. Rather than viewing each other as adversaries, many legacy banks have chosen to partner with fintech startups, creating hybrid structures that leverage the strengths of both sectors. Large, established banks bring with them vast customer bases, regulatory experience, and capital, while fintech companies offer agility, innovation, and cutting-edge technological solutions. These alliances result in faster product development cycles and the creation of services that are more responsive to the needs of today's digitally savvy consumer. Such collaborations are evident in areas like digital lending, where traditional credit assessments are being enhanced by alternative data sources and sophisticated algorithms developed by fintech firms, and in wealth management, where robo-advisors coexisting with human advisors deliver better, more customizable investment solutions. Financial inclusion has also emerged as a central theme in the digital banking revolution. In 2025, digital platforms are bridging the gap between formal financial services and historically underserved or unbanked populations. Mobile banking, in particular, has proven to be a powerful tool in reaching remote communities, where physical bank branches are scarce. By offering low-cost, accessible financial services through mobile networks, digital banks empower individuals with the tools necessary to save, invest, and manage credit more effectively. The intersection of digital identity verification and secure electronic payments has accelerated the provision of essential services such as remittances, insurance, and microloans to low-income individuals and emerging economies. This expansion of access not only drives economic growth, but also fosters a sense of inclusion and empowerment for millions who were previously marginalized by traditional banking structures. In parallel, digital banking in 2025 sees an emphasis on sustainability and socially responsible investing. As consumers become more conscious of the impact of their financial decisions on the environment and society, banks are integrating environmental, social, and governance (ESG) metrics into their digital platforms. These systems enable users to track and manage investments that align with their ethical values while providing transparency about the social and environmental footprints of various financial products. This trend towards responsible investing is further bolstered by regulatory changes and market pressures, driving banks to develop innovative products that cater to the growing demand for ESG-compliant investments. The fusion of digital banking with sustainable finance principles highlights a broader shift in how value is defined in modern economies, one that transcends mere profit to include social impact and environmental stewardship. The future of digital banking is also marked by its ability to adapt quickly to unforeseen challenges. As data becomes increasingly important, banks are evolving from reactive to predictive models, using advanced analytics to anticipate market shifts and consumer needs. This predictive capacity is invaluable not only in customer service but also in risk management, as institutions can proactively identify potential stress points in their portfolios. With access to near real-time insights, digital banks are better positioned to adjust their strategies dynamically, ensuring resilience in the face of economic fluctuations or emerging disruptions. The agility inherent in digital banking platforms provides a significant competitive edge, allowing institutions to swiftly implement changes or roll out new services with minimal friction. Ultimately, the digital banking revolution in 2025 is characterized by an ecosystem that is more interconnected, secure, and customer-centric than ever before. The convergence of emerging technologies, strategic partnerships, and an unwavering commitment to innovation and security is transforming traditional banking into an agile, adaptive service that meets the demands of a digitally entrenched society. As digital channels continue to redefine how financial services are delivered, the benefits, ranging from enhanced personalization and improved operational efficiency to greater financial inclusion and sustainable investment opportunities, underscore the transformative impact of digital banking on global markets. With consumers increasingly expecting seamless, instantaneous, and secure experiences, the banks that thrive in this environment will be those that not only embrace change but also anticipate the next wave of innovation. The current trends indicate that digital banking will continue to evolve rapidly, driven by the relentless pace of technological progress and the ever-changing needs of consumers. In 2025, the digital banking landscape will have transformed into a dynamic and adaptive network, where traditional models have given way to solutions that emphasize agility, transparency, and personalized customer engagement. This revolution is not simply a phase in the evolution of financial services. It is a new paradigm in which data, technology, and human-centric design converge to create financial systems that are more responsive, inclusive, and resilient. With the continuous infusion of innovative digital solutions, the future of banking is poised to deliver unprecedented levels of efficiency and customer satisfaction, establishing new benchmarks for what financial institutions can achieve in the digital age.